Episode 267, Mark.
Wow.
Almost in the books.
Wow.
Getting close. We're getting close.
Good to see you, John.
Nice to see you. How's the weather up there in sunny New Jersey?
Yeah, it's absolutely beautiful. We're definitely getting a little bit of late summer, which after all the rain that we had through the spring and the summer here in the Northeast, this little continuation, this unexpected extension of summer, very well received. I have not put the top down in 2 days, John, and I'm going to keep it that way until the weather dictates otherwise.
Well, they used to call it Indian summer. Now I guess it's First Nations summer.
We just got canceled, John. Thank you. That's great. Thank you so much.
So, folks, welcome to the Rebel's Edge. He is Marc LoPresti. I am John Najarian. Jared is handling all of the dancing bulls, bears, and again, confused bulls and bears. We'll tell you why they're confused in a moment as we dive into the Macro Minute. So, Mark, we had Consumer Price Index, CPI, showing inflation up another 0.4% over last month. That's certainly down from the highs, but nonetheless, when the president came into office, it was 1.4% inflation, and today it's 4% inflation. It's a lot better than the double digits we had briefly, Mark, but it still ain't good.
No, and it's still going in the wrong direction, you know, and I always try to make that important distinction when people talk to me about this and ask me about this, because I think the way that, you know, most of the talking heads in this business talk about a print like this, the inflation pictures, you know, improving moderately. No, it's just rising less than it was in previous examination periods. And then when you get into the food and energy component of this, you get the real picture. This not good news, I think, for the markets, not good news for JPOW, but, and this is my macro minute, John, I cannot get over this market's ability to shrug off bad news. We have a situation going on in the Middle East, which we won't go down that rabbit hole, you know, incredible grief and atrocities being committed there, and the possibility of that becoming a broader conflict. The market just doesn't seem to care. And even largely shrugging off this, what I would suggest is not a great CPI print this morning. So I'm looking for cracks in the dam. That's my macro minute.
Well, I was saying they were whistling by the graveyard, Mark.
Yeah.
And we'll see. Right now, the hope is, I guess, that the conflict or war, as Israel has declared it, will be something that keeps the Fed's hands tied, that they will not be able to move further on rates if we have another hot war somewhere on the planet. Time will tell.
But John, not if the market tells the Fed it doesn't care, right? I mean, as much as the Fed likes to suggest they don't listen that much to the market sentiment, right? They need to dictate monetary policy based on things that are perhaps, you know, more tangible or less volatile than the day-to-day sentiment of the market is expressed by a movement to the red or to the green. But if the market shrugs this off, I think the Fed does too. I got to be honest with you. That's what I think. I do not think, unless there's a major escalation and the involvement of another, God forbid, you know, another major international player, I don't think this changes monetary policy as we stand today.
Well, again, time will tell.
Yeah.
Let's dive into, Mark, fantastic futures.
Fantastic futures.
Nice. And crude marches higher again. If you look at a chart, folks, of where crude oil was last week, and it was dipping pretty significantly, obviously, because of the declared war in the Middle East, again, Israel declaring war, it popped to about 85. But if you look at the chart will tell you that, man, that was a very quick dip down to the $81 level, and we're right back moving to the upside. So that's my fantastic future. How about yours?
Yeah, I mean, I'm same, John. I'm keeping my eye on energy, oil in particular. I've heard a number of analysts and traders that I talk to with renewed sort of $100 price targets. I think that is very possible, and I think the wild card that this conflict has thrown into oil markets is something that people have to watch very, very carefully.
Yep. And I jumped on a Twitter space this morning, Mark, with the Wolf of All Streets, Scott Meckler,
Yep.
and they were talking about, well, the fact that we've got what we've got as far as higher inputs. This is making Joe Biden look more and more like Jimmy Carter. You don't get reelected president. I don't care who you're running against. If you have inflation running hot, people paying $7 a gallon for gasoline, that granted the rest of the country, it's 5 to 6. But I mean, this is just not good for the incumbent. And I don't know what breaks this fever, quite frankly. Let's talk about ViaSat, VSAT. Now, this is something I use all the time, Mark, and I know you do, because they provide broadband in addition to airplanes all over the place. If you wanted satellite delivered broadband, there's really, I guess, three choices. There's Hughes, really terrible. There's Starlink with Elon Musk, wonderful. But on airplanes, commercial airplanes in particular, a lot of people use Viasat. It's up big today because they affirmed 2025 fiscal year guidance and boom, boom, boom to the upside, Mark.
Yeah, I mean, they have a partial monopoly on airplane Wi-Fi, and I'm not even sure how many folks realize that when they connect with Wi-Fi on a lot of, if not most of the major carriers, it's them and GoGo, I guess, right?
Yep.
Are the two. How often they use and consume this product, and I think, and this might be an interesting segue to another name we're going to talk about, a company that I certainly was a major consumer of for a long time, certainly pre-pandemic, in terms of the continued demand for air travel, particularly international air travel, right? If more, and it's not rocket science, John, if more planes are flying, if more folks are flying and they're flying longer and international routes, that's good for Wi-Fi carriers like ViaSat. So interesting to see. I don't know. Do you think it's a little overpriced? Would you be looking to buy some here, or do you think that it's already sort of the run is done?
Well, I think they've made inroads. I mean, so for instance, they've become a de facto carrier for a lot of routes for American.
Yeah.
So if you go over the ocean outside the continental U.S., they are definitely who carries the broadband for American. Otherwise, it tends to be GoGo. But with it right here, it's a $2 billion company, and it's a third of the 52-week high. I think it's got more room, Mark.
Interesting.
To answer your question. All right, but now here's that stock that Mark is whatever the Black Circle member or whatever it is, presidential this and that for Delta Airlines. They came out with some just fabulous earnings, a record revenue, but not record profit. And
right.
I think we all know why, but I'll let Mark step into that a little bit. Delta stock hit 49.81 back in July, Mark, and it has gone boom, boom, boom to the downside since, and it couldn't hold those early gains today. It's flat right now.
Yeah, I mean, look, I think a lot of people are asking the same questions that I'm asking, which is, how long can this sustained demand for air travel continue in an interest rate environment that makes businesses less likely to send people on expensive overseas trips for meetings that they can do over Zoom and other platforms, where the consumer, the impact of the consumer much delayed, and the consumer demonstrating even perhaps more remarkable resilience and shrugging off adversity than the markets are, right? And we keep talking endlessly about credit card levels and savings levels and all of that, and when that's going to start to impact. It's that labor market strength that's been the offset to those factors that would otherwise cause that kind of pain for the consumers. But look, when you talk about energy, right, fuel prices, expecting to be, continue to be rather costly for the airlines. That, of course, their largest component, of their cost, their COGS, their cost of goods sold. You can see why, notwithstanding these really terrific numbers from the very talented Ed Bastian and the folks over at Delta, that maybe the market's saying, this ain't sustainable. I tend to agree.
Yeah, it's challenging right now. There's no doubt, because all of these major carriers, folks, as you've heard, have signed these new contracts with their various unions, pilots, attendants, gate people, and so forth, baggage handlers. So the costs have gone up pretty dramatically. And the last thing they needed was this other input that Mark mentions, their biggest expense, to keep going higher. And it doesn't look like that fever is going to break just yet. Let's talk about INMD. This one, Mark, InMode, they're basically a company that does very minimally invasive treatments on men and women to make them look better. It's an aesthetic, whether it's fractal, I think they call it, when they hit you with that certain type of light and so forth, to, again, make your skin look younger and so forth. Apparently, the CEO said the constraints of financing their medical equipment is being rather dramatically felt by the company. And for that reason, they were cutting full year 2023 numbers, not 10%, but about 8%. And that was good for a double-digit drop on the opening and continued lower throughout the session, Mark.
Yeah, I mean, look, as much as people like to spend and do tend to spend on health and beauty, even in interest rate environments like this and where the economy is under some pressure, this, I think, is more of an upmarket product set, John, that people will tend to cut back on versus just going from, the very expensive mascara to maybe the less expensive mascara, et cetera, but continuing to spend on health and beauty. I'm not exactly surprised to see these numbers in this outlook from this company.
Yeah, it's and to throw one more thing out there, Mark, they're also based in Israel.
Yeah.
So, that is to say that there are a lot of really bright people and a lot of very innovative products that come out of Israel, a country of 9 million people. But when you've got a war going on and you've got interest rates higher and all the rest, it becomes all the more difficult for you to post up or have an optimistic view of, oh yeah, we're probably going to beat next quarter. They're probably looking at the business, but they're also looking at what's going on the ground and in the air.
Yeah.
So our prayers are with people on both sides of that conflict, but certainly not with the terrorists in that conflict. All right, Mark, what about Carvana? This one, obviously, started the year as a nothing burger, ran to the upside, ran to the mid 50s, and then has broken down 33%. And I got to think, Mark, that this is yet another victim of those higher interest rates, that they're just not able to move the same amounts of inventory when, they have to charge significantly higher prices to the consumer, and that they have to bear those higher interest rates for the inventory that they accumulate.
Right. Yeah, in terms of their own borrowing costs. This one is an interesting one, John, and I'm actually looking at this carefully to see whether or not I think it starts to become perhaps attractively priced, because there's just so much going on in automotive right now. Of course, the expansion of the UAW strike, putting now a lot of question on the minds of traders and investors as to what that's going to mean in terms of new car output from the majors. We've already seen some reports of layoffs of non-striking workers at the majors, because if you don't have the striking workers on the line installing, part XYZ, you don't need to buy that part XYZ, or at least not right now. So we're already starting to see some rather significant impact from that very, very dramatic and historic strike in the UAW. And the other thing that I'm sort of trying to square root as to why I think maybe I might be looking to buy this thing under continued pressure is that continued high interest rates puts more pressure on the new car end of the market than it does on the used car end of the market. I think that's part of why we've seen Manheim, that index, that important used car price index that we watch so carefully, perform the way it did. The print was to the upside on the last Manheim, if I remember correctly. I think 1.5 or 1.75 roughly. You might have the exact figure in front of you. But if folks can't afford, because of finance costs, that new pickup truck, they turn to the used market, and because they got to drive something, right? They got to get to work. This is a country, we love our cars. God knows I do. And we will drive. And that's one of the reasons why people vote with their pocketbook when it comes to gasoline prices, because it's like viewed as a restriction of their freedom to get out and drive and go wherever the heck they need to go or want to go. So I'm not sure the beating that this company is getting right now is as deserved. So this is definitely on my watch list.
We've had it on the upside a couple times this year, Mark.
Yeah.
And certainly those bets have paid off for unusual option activity. So I would love to see people starting to accumulate it in the low 30s here. And if that's the case, I'd be right there with you. I think it could pop pretty easily back into the 40s, but let's let that scenario play out a little bit. All right. A scenario that played out against Pete's Minnesota Twins was the Houston Astros eliminated the Twins yesterday and moved on to their 7th straight ALCS, Mark. 7th straight time that they have advanced into that position. It's pretty amazing that team, with all of the scandal that followed them for a while, is able to build back into this just, almost a New England Patriot-like winning into these playoffs. It's amazing.
Yeah, it has definitely been a very exciting postseason for baseball fans. And boy, oh boy, Texas baseball fans, this is the first time in Major League Baseball history where you've got 2 Texas teams competing at this level in the postseason. It is a setup that I know a lot of folks are going to be watching. Are you thinking the Astros are going to take it, John, or what's your view on this game?
It depends, Mark. I'm not trying to waffle on that. I'd say the momentum is with them, with the Astros. Great pitching staff, great hitting with Abreu and all those folks. And if, on the other hand, the Texas Rangers that were that position at the first half of the year prior to the All-Star break, they could be very difficult to beat, because in the first half of the year, they were almost unstoppable.
Yeah.
And then they had that dip, and then they came on just enough to make it into the playoffs, and they've done well in the playoffs. So, yeah, I'm really looking forward to this one. They're going to be playing on Monday, so they get a few days off, let's say 4 days rest or whatever, and that should be a great playoff. I think they'll get some pretty good numbers, because obviously Texas is also a big market. So I think they'll get some good ratings numbers.
Yeah, for sure. And, listen, the Rangers coming off of their own momentum, maybe not perhaps the same as the 7-game streak of the Astros, but they, if I remember correctly, are on at least a 3-game winning streak thus far. So I think it's going to be some really, really terrific baseball. I'm going to be hopefully watching on Monday, as I know most of my friends in Texas are going to be glued to their screens and populating all of my favorite, I should say our favorite, bars and hangouts in Dallas and other parts of the great state of Texas.
Yeah, it should be fun. Well, folks, that's going to do it for us today. Pete is still licking his wounds over that Twins loss. At least it was 3-2, Mark. So that was something. But we will be back Monday at 1 p.m. Eastern Time. Want to thank Marc LoPresti for joining us as he does so frequently. But thank you, Mark. And we'll see all of you on Monday.